Hello friends, today we will study about accounting principles. So in simple words, a journal law or rule adopted or professed as a guide to action, a settled ground or basis of conduct or practice is or are accounting principles. So why do we use accounting principles? The reason is it is very important to adopt principles in accounting because we want to record business transaction in a proper manner, and we also want that the work of accountancy must have universal acceptability. Accounting principles are generally accepted by the accountants all over the world, and these principles have been developed by the accountants through their experiences and requirements. So basically, there are three types of accounting principles. Number one is basic concepts, second is basic principles, third one is conventions. So first of all, we will study accounting concepts. On the top or on the first, we will study accounting period concept. This one. So as we all know that business goes on for indefinite period, but still we have to calculate profit to evaluate the result of business transactions on yearly basis. This is also called accounting year concept. So this year can be a calendar year which starts from 1st January to 31st December, or it can be a financial year from 1st April to 31st March of the next year. Because of this concept, the work of accounting is performed on yearly basis throughout the world. This period of 12 months is termed as or is called as accounting period. But in case if anyone starts its business between the year or during the year, so his financial year can be less than 12 months. For example, if I start business on 1st October, then in that case my business or my accounting period will be from 1st October to 31st March, and then it will be of 6 months only. As per income tax also, they have made compulsion to adopt financial year as an accounting year. Next is business entity concept. According to this concept, business is separate or distinct from its owner. Business unit should have a completely separate books of accounts, and we have to record the business transaction from the point of view of business and not from the point of view of owner of the business. For example, a balance sheet of the business presents the financial position of the business and not of the owner. When a businessman invests money in his company or in his business, he becomes the creditor of the business, and the transaction is recorded in capital account. And when he withdraws cash from the business for his personal use, then that becomes drawings. Okay, so business has different or distinct personality than the owner of the business. Next one is going concern concept. This one, third one. So what does this mean? As we all know, business continue to exist for an indefinite period in future. That's why we purchase fixed assets such as land, building, plant and machinery, furniture, etc., and show them in balance sheet. So it is because of going concern concept that the outside parties enter into long term contracts with the business, give loans, purchase shares or debentures of the companies. It is also because of this concept that the assets are classified as current assets and fixed assets, and liabilities are classified as short term or long term liabilities. Our fourth concept is money measurement concept. According to this concept, only those transactions are recorded in the books of accounts which are of monetary in nature. What does this mean? That if a company purchases plant of 5 lakh, it will be recorded in the books of accounts. If a company purchases land of 10 lakh, it will also be recorded in the books of accounts. But if senior employee gets retired, then that will not be recorded in the books of account. If a person is very honest, then that will also be not recorded in the books of account. Government changing government policies or increasing competitors in the market will not be shown in the books of account. So this is a kind of drawback, because these decisions, these affects the managerial decisions. So only money transactions are recorded in the books of account. Next, we will study basic principles. Now, first one is principle of full disclosure. Now, what does this mean? It is a convention, or it is a principle. This principle requires that all information must be impartially and honestly disclosed in the books of account, so that all parties, those who have interest in the business, such as owners, bankers, investors, creditors, or government agencies, must get full and true information from these accounts. So it is clear. Next one is principle of dual aspect. It is also an important principle of double entry system. It is also known as duality principle. According to this principle, every transaction affects at least two accounts. If in a transaction one account is debited, then other account will be credited with the same amount. Therefore, at the end of the year, when we see balance sheet, we will find both the sides, assets and liabilities, are equal. This is because of the duality concept. And before preparing balance sheet, we also prepare trial balance to check the arithmetic error of the accounts. Just if there is error, then the accounts will not be matched. Okay, so in this way we can check, is there any error in the books of accounts or not. Next one is principle of matching revenue with expenses. As per this principle, profit for a period is ascertained by matching the revenue and expenses of that period. So all the expenses of that period should be included, whether they are paid or outstanding. This means if I spent, for example, I'll take previous example. If I spent 5 lakh for purchasing a machinery and I paid only 3 lakh rupees and 2 lakh is outstanding, but in the books of account I will show 5 lakh because they pertains to the current year. In the same way, prepaid expenses. Prepaid expenses means those expenses which are paid in advance will not be included in the current year because they pertains to the next year. Same is the case with the revenue of that period. If they pertains to the current year, then that will be included. Otherwise, if they are received in advance, then that will not be shown for the current period. Okay. Next concept is principle of expenses. Expense is the cost of goods and services used to run a revenue. Expenses includes cost of goods sold, commission, salaries, distribution expenses, then decrease in the value of assets due to depreciation. Expenses are not recognized at the time when they are paid, but at the time when they are incurred. Same which I told you in the previous principle, that when expenses which are related to the current year, when they are incurred, that are taken to be in concern. Next principle is principle of historical cost. Now what does this mean? Principle of historical cost. According to this principle, assets should be recorded in the books of account at their acquisition cost or their purchase price, plus if there are any expenses for the installation, then that should also be added in that cost. If I purchase machinery of 5 lakh and I spend 10,000 for its installation, then the cost of the asset or plant will be 5 lakh 10,000. And after 2 years, suppose that plant becomes obsolete, but still it will be shown at the cost price and not at the market price. Okay. Next and last principle is principle of revenue recognition or realization. If you understood the concept, third concept, principle of matching revenue with expenses, this one and this one, then this one will be easy for you to understand. Principle of revenue recognition or realization. This means a revenue is recognized as earned when it is received. Here, revenue does not mean cash received, but it means revenue accrued. In the same way, if I sold some goods for rupees 50,000, but I received only 35,000, remaining 15,000 will also be shown for that period because it pertains to that period. Clear? Now next one is accounting conventions. This is our last type of the accounting principle. These are also called modifying principles. Means these can be modified according to the nature, size or condition of the business. So first one is principle of materiality. Now this principle is an exception to the principle of full disclosure. This one and this one. Now how it is exception, I'll tell you. According to full disclosure, we studied that business has to disclose each and every item very honestly, so that those parties which are interested in business must know the true position of the business. Okay, this we studied. But as per this principle, only those transactions are to be disclosed which are of significant nature. For example, if someone is running a business in crores, then they need not to disclose if an accountant purchases a pen of 20 rupees. Those can be shown as under the heading stationery expenses because that is not a significant item to be disclosed. Clear? So next is principle of consistency. This one. As per this principle, same accounting method should be used every year to record the business transaction so that profit and loss account and balance sheet of various years can be comparable. As we all know, we compare result of this year with the previous year so that to know we can know that whether we have improved, whether we have grown or not. And we also compare result of our business with the other firms of the same industry. Why? To compare ourselves whether we are improving, whether we are growing in the market or not. Okay, for this there should be consistency in the principles which we are using. For examples, at what method we are depreciating our fixed assets, how are we evaluating closing stocks, and how we are creating provisions for doubtful debts. Okay, third one is principle of timeliness. It is a modern principle of accounting. The main objective of this principle is to record the business transaction at proper time and complete the work of accounting well in time and supply the accounting information to the manager at the earliest, because they have to take important decisions for the business. If information provided or accounts provided are not provided on time, then decision making will be get delayed, and due to that business may suffer loss also. Okay, so the information must be provided at the earliest possible time at the end of the every year. Next one is principle of conservatism or prudence. According to this principle, provision should be made to meet the prospective losses, and we should leave all prospective profits. For example, again I'm taking the example of plant and machinery. We provide depreciation every year, because suppose if plant and machinery you purchase of 5 lakh, after 5 years we have to purchase another plant and machinery. For that we have to again spend 5 lakh rupees. So 5 lakh rupees is a huge amount. So to avoid this huge sum, what we do, we start charging depreciation on the machinery of 10%, of 20%. Okay, in this way we set aside some amount, and that we use while purchasing another machinery, so it will save some of the amount. Okay, so this is a principle. In this way we also provide provision for doubtful debts, because all debtors will not pay us, so we provide some provisions on them also. So if someone asks discounts, that I want some discount, so we adjust that amount already by providing some amount under provision for doubtful debts. Okay, so that's all for today. Thank you and have a good day.